and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our Clean Energy Metals Conference. Our next presentation is from Ucore Rare Metals. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Pat Ryan, Chairman and Chief Executive Officer, and Peter Manuel, Chief Financial Officer of Ucore Rare Metals, which trades on the OTCQX Best Market under the symbol UURAF and on the TSXV under the symbol UCU. Welcome back, Pat and Peter.
Yeah, great. Thanks to be here. We'll launch right in. You can see on the opening slide here, catchy title, maybe catchy. Policy changes reshaping the global rare earth market. There's been a lot of talk of late about different governments stepping in, offering support, equity deals being put forward, trade battles, trade tensions that are really amping up. There was a comment just recently about further increased proposed tariffs on China if the rare earth market did not become more favorable for the U.S. But again, a very geopolitically tense, policy-changing time. We'll go through a lot of the detail here of our business plan and try to be a little bit more brief on the uses of rare earth and whatnot, where we're assuming some of the audience would pretty much have a pretty good idea what that all looks like. First off, rare earth permanent magnets. Rare earth permanent magnets, it's the most efficient means of converting electrical energy into mechanical energy. And that's what the talk's all about. It's about getting rare earth elements that go into making metals and alloys that then go into making magnets. And those magnets are the ones that really drive the defense mechanisms for the current global environment, as well as emerging industries, 21st century tech. It's all driven by permanent magnets. And that control is very much in the hands of China. If you look at the graphic in front of you or the pictures in front of you on the far left, electrification of vehicles, the motors in the electric vehicle driven by rare earth permanent magnets. 2 out of 3 EVs in the world today are made by China. There's a reason for that. They control the critical mineral inputs, not just the battery inputs, but the motor as well. Wind energy, sustainable energy, but wind in particular. 2 tons of permanent magnets go into an Haliade X offshore wind energy turbine. That's 2 tons. Robotics and AI. It'll be the largest user of permanent magnets by 2035. A very sizable market growth. And again, think of transportation, logistical systems inside Amazon warehouse and whatnot. Think of humanoid robots that are up and coming. Think of all sorts of different factories and whatnot that are driven by essentially robots inside factories. That's all driven by permanent magnets. And finally, on the far right, the most crucial use of rare earth, which is why the current trade negotiations are so tense and in a very delicate balance. And that's because things like an F-35 fighter jet, they have 935 pounds of rare earth elements in them, nuclear submarines, missile guiding systems. In fact, all your weapons conveyance, your weapon guidance, your communication systems in defense, they're all controlled by permanent magnets. So you can imagine what that looks like if those permanent magnets are controlled by China and global tensions continue. So again, rare earth permanent magnets, very key to the future market going forward and very much controlled by China. This is an interesting slide here. And essentially it's saying that, you don't have to have that resource in country in order to actually control the resource. What you have to control is the refining. And for China, that's what they've done over a couple of decades now. If you look at rare earth in particular, they control 65% of the mining of the rare earth elements, both light and heavy. But when it comes to the actual control of the resource, it's 95% because the refining is actually controlled. And because they control the refining, they then control the manufacturing of those permanent magnets we just talked about. That's 95%. So whether it's battery inputs or whether it's motor inputs, you can see that the control that China has, and really over 30 of 50 critical minerals, it's achieved by taking control of that refining. And that's the key point. Controlling the refining controls the critical mineral. Here's an interesting graph on the growth of permanent magnets. And this is the Western world market only, so outside of China. But you can see by 2034, 180,000 tons of rare earth permanent magnets required. And the line on the bottom is really what the growth of existing facilities and new facilities come on board look like. There's quite a gap. And that gap needs to be taken up somehow on a global level because China has such control of the rare earth permanent magnet market. It's actually 600 to 650,000 tons of permanent magnets that are part of the global landscape by 2034. But that gap right now in the Western world, that's one that's a very serious concern because of emerging industries. Things like semiconductor manufacturing, again, AI, robotics that we talked about, sustainable energy. It's all driven by these permanent magnets, and there is a gap going forward, and a heck of a growth going forward as well. This one here kind of shows what the global landscape looks like. This is really a supply chain. So, mining on the far left, oxides, that's your refining. Refining to oxides, or seeds of technology, as the Japanese call it, or building blocks of technology. Metal and alloy manufacturing, and finally goes into the magnet making on the far right. And you can see that China controls those percentages going right across the board. If you look at other on the bottom, refining, you've got 10% other. That's the Malaysia plant that Lynas has in Malaysia. It's a separation facility for light. It's got a little bit of heavy coming on board, but you can see that the actual control of refining is really much China. That's where the grip is. And if you can get that grip back, if you can get that refining back, then you can start to link the mining operations that are up and coming in the Western world, along with metal alloy magnet makers that are up and coming in the Western world. But without that refining, you have a broken supply chain. So you really need to key in that particular area. Some of the recent events that you would have heard about, in the news. In April of this year, there were actually 7 critical REEs. There are 17 total rare earth elements, both light and heavy, but 7 of those critical REEs were actually banned for export and today made very, very difficult for export. And the 7 that they picked out of the 17 were very precise. Dysprosium and terbium, those are heavy rare earth elements. You won't make a permanent magnet without a heavy rare earth component. It's mostly light, but you have a heavy rare earth that goes in there to allow the magnet to withstand or hold magnetization at really high temperatures. So those heavies, dysprosium and terbium, they're 99.9% controlled by China, and therefore having those banned really is a heck of a card in the trade negotiations. Samarium and gadolinium, again, rare earth elements. Samarium used in samarium cobalt magnets, again for defense, F-35 fighter jets. Gadolinium used in those same samarium cobalt magnets. So again, very laser, very precise, banning materials that they know the West doesn't have available, and therefore it becomes a real issue. June of this year, the Wall Street Journal reported that it's getting so tense now. Back in 2023, the actual export of technology from China for anything to do with rare earths was completely banned. It was illegal, huge fines, people going to jail. And in June of this year, it was noted that anyone that had any experience in the rare earth industry, whether it was refining, whether it was magnet making, metal alloy making, passports were being confiscated. You could not leave the country. You could not have any consulting intel leaving the country. And so a real crackdown on everything. Mid-August or August 11th, trade war continues, extended for another 90 days. And part of that is because there's no solution for the rare earth side. And again, it was just in the last 48 hours, last 24 hours that President Donald Trump said, hey, you've got to start lightening up on these rare earths. You've got to start allowing that to flow to America, or we're going to continue to amp up the tariffs on China. So again, very tense, realizing that that's a missing part of the critical industries going forward. And then finally, on August 15th, it was noted that by China, anyone that thinks they're going to try to hoard materials or create stockpiles of materials based on being clever about trying to get exports out of China, if you do that, we'll cut it off even further. So it becomes an even more damning situation. And again, that's some of the most recent news wrapped up in a very geopolitically tense trade war. What does that mean from a real world execution? Well, on a defense side, defense inputs, Lockheed Martin, McDonnell Douglas, they've had cost inputs that have been 5 times the norm. And that's because of the ban and the restrictions that are on. Samarium cobalt magnets have been noted to be up to 60x what it typically would cost because it's just not available. So any black market material is actually priced that high. Over 80,000 components in the defense world are actually reliant on rare earth elements. And it's a single point of failure, whether it's missile guidance, communication systems, conveyance, it's all a single point of failure because of rare earth permanent magnets. Again, a very precarious and awkward situation for the U.S. and the Western world to be in. Ford Motor Company plants, coming to a stop and a start because they can't get rare earth elements that are used for permanent magnets inside their vehicles, not just for the motor, but for other parts of the vehicle where you have a permanent magnet. And they've just had to, their Chicago plant, for example, it's had to stop a number of times because they don't have the inputs. Or someone like Rivian, electric truck company. Q2 results were way off because they could not get the inputs needed in order to make their vehicles in Q2 of this year. But things are changing. There's a lot of news of change of late as well. And part of that's that the Western governments are realizing, you know what, let's not let the puppeteering go on anymore. Let's step in and let's provide sound deals. Let's make equity investments. Let's put pricing floors in. There was a recent deal announced, multi-billion-dollar deal with MP Materials. And within that, they established a pricing floor for NdPr. That's a light rare earth used in permanent magnets. And the pricing floor was set at $110 a kilogram. That's twice the spot price in China. But it's essentially saying to the Western world, you can be assured of some sort of safe level of investment and safe growth and project development by putting these floors in. Note that the MP deal, however, does not mention any of those 7 critical rees that China actually banned. They deal with NdPr and they deal with a magnet plant that's going to increase to 10,000 tons of permanent magnet material per year, or permanent magnets per year. But think of that second chart we looked at where 180,000 tons are needed. It's 10,000 tons that MP's been given the go-ahead with the Department of Defense. Still a good move. U.S. government stepping in and saying, we're going to support this. That works very well for Ucore because we're focused on heavy rare earth. We're focused on samarium. We're focused on gadolinium because of our tech that I'll talk about here in a minute. And because of that, we're also going to look to the government for perhaps some type of floor pricing, which the West needs. It needs a Western price model to stop the state-owned puppeteering of the supply chain that China has. They can move their margin around any day of the week, and they can create a very low price for metal and alloy. They can create a very low price for magnets. They can create a very low price for the refined oxides. But and they can move that around. So you've got to have a Western pricing model that protects some of that. Australian government of late, they noted that any materials that get shipped out of Australia for use for emerging industries, defense, et cetera, there would be a floor price set on those. So things are changing. The governments are realizing we can't just rely upon industry to take care of things because China is manipulating. So let's step in and let's help it. So again, what the typical supply chain looks like. So on the far left, you have your mining. And there are a number of up and coming mining operations around the world. There are a couple of mines that actually can provide material, which Ucore is looking to as it looks to build its first commercial refining facility. But the opportunity, the challenge and the opportunity is right in that mid-market, and that's where Ucore is focused. We realized back in 2019, we have a resource in Alaska that's heavy rare earth in its nature. And we realized, wait a minute, if we bring this mine to fruition, which can take 10 to 15 years, by the time the concentrate and the milling of that concentrate, beneficiation of that concentrate became available, you could only send it back to China for processing. And once it arrived in China, it would stay in China. It was not going to leave China. On the far right, you have your magnets, your metals, and your alloys. And it's not always magnets. Magnets are certainly the largest use, but consumer electronics, they use refined seeds of technology or oxides, as we call them, that mid-market, and they don't require a permanent magnet. But the Ucore model is let's focus on that middle market. Let's focus on building that bridge between the up-and-coming mines and the downstream. Without that, nothing works. You've got to have the complete supply chain, and this is a very critical bridge in there. And that was the eureka moment back in 2019 when Ucore realized it, scoured the globe, and found the best-in-kind technology to look at rivaling solvent extraction. Solvent extraction is the only process used in the world today to separate out rare earth oxides. Used in China extensively, very chemically intense, not ESG compliant, very big and cumbersome, but and typically made for one feedstock. We discovered that the best way to combat that was not with something that was perhaps molecular recognition or microbes that would go in and eat away at earth and whatnot, or in printed polymers, or high heat, high pressure, type process that we're developing. But to take the same chemistry and say, let's innovate, let's take that chemistry and apply it that much more effectively. If we can apply the chemistry much more effectively, we'll have a winning situation. If we don't have football fields of plants with mixers and settlers that allow you to separate out those individual oxides, if we could do it with a column-based technology, which is computerized and run with sensors and has machine learning, and you could turn it on and turn it off, and you could switch from one product 1 week to another product a couple of weeks later, that would be a winning position. That would be the way to tackle this in the Western world. And that's in fact what Ucore found when they acquired Innovation Metals Corp. 100% acquired Innovation Metals Corp in 2019, and since then invested several $1 million to make sure that we were coming on point, on board, to be able to supply the Western world with what it needs, and that's that critical refining. Here's a shot of the plant itself on the right. It's hard to tell in a bit of a blur here, but those columns are actually 16 feet high. The size of the plant is 2 tennis courts. Very reconfigurable, scalable, modular. You can have a smart deployment of capital. A typical 5,000 ton per annum solvent extraction plant can cost upwards of $400 million US, whereas a Rapid SX plant, the technology Rapid SX as we call it, costs less than 100. And so therefore you can go in a very scalable, modular way and build it out very effectively. It's a closed system. It's not open to the environment. It's got a much better footprint. You just have 1/3 the space, and therefore the CapEx, that's why it's greatly reduced. It uses less chemicals, less reagents, less power. It's using sensors and PLCs as opposed to people and going around measuring and taking, making your process work that way. So a very smart way to tackle and innovate for the Western world in this refining. Again, some of the advantages, and the plant again shown on the right, but better OPEX, depending on the feedstock. We've achieved 3 to 7 times OPEX. That's better than solvent extraction. We've got a much better CapEx footprint. We've got an ESG compliance system. Again, it's closed. When you walk into a solvent extraction plant, you smell all the chemicals. When you walk into a Rapid SX plant, you don't smell anything. It's like an office building. It's completely closed. And that closed system is very ESG compliant. So again, a smart way and scalable and modular. So you can build, a Rapid SX machine, as we call it. And then you can run that machine, you can create product, and you can build another machine and another machine and another machine. You continue to make product and create revenue and income as you move forward without having to disrupt your first production. When you build a solvent extraction plant, you build one big behemoth plant. You look to turn it on and anticipate that it will work in that way. Also feedstock agnostic, whether it's a monazite, ionic clay, bastnasite. We've run all this material through our demo plant. We've got 6,000 plus hours on this plant right now. And we've done that in a very commercially robust way. So we're ready for commercial prime time. Here's a building in Louisiana. It's our Strategic Metals Complex. We acquired this building a couple of years ago. And we're doing a copy and paste. So the equipment that you saw, or the Rapid SX machine that you saw in the previous slide, that gets copy and pasted into this building. So it's really then building out in a scalable, modular way. And we're doing it in 3 stages. The 3 stages, stage 1, you have 2,500 tons per annum total rare earth oxide throughput. Stage 2, 5,000. And stage 3 will be 10,000 total rare earth oxide throughput. We're creating heavy rare earth. We're creating light rare earth. And very much a smart way to deploy your capital, a smart way to prove out your concept and move forward. So it's in central Louisiana, happens to be in a foreign trade zone, which is interesting. When we found this facility a couple of years ago, did not realize that there were a handful of areas left in the US. This is on an Air Force base. And with that, any materials coming in, for example, from Australia, coming in from Brazil, being turned into an oxide product and then sent to a metal maker, maybe in the UK, maybe in Japan, a magnet maker perhaps in South Korea, there's no tariff consequence. And there's no tariff consequence because it's a foreign trade zone, which is very advantageous in today's world as those pieces of the equation keep moving around. So central Louisiana, chemical trade, lots of good schooling there. Power consumption's good. The waste from the system is saline water. Again, it's an ESG compliant system. We will have this plant up and running in stage one, commissioning for stage one by mid-2026. That's not that far off. The first stage of our development cost $65 million. That's for the infrastructure and putting 5 rapid SX machines in to develop that 2,500 ton throughput for this facility. So again, very much affordable. Again, good OpEx, thousands of hours run on our demo plant. So we understand how this plant that's currently being engineered. We've been doing the civil site work. We had a grand opening, or a groundbreaking, I should say, on May 29th. We had people from the DOD here. We had people from Mike Johnson's office. We had people from Senator Cassidy's office, federal people, state people, Louisiana economic development people. Big event, and everyone's looking forward to this becoming an ecosystem for refining of rare earth elements, bringing in feedstocks from around the world. Department of Defense, we can't understand that understate that apart from our technology, the most valuable asset we have is our relationship with the U.S. government. Back in 23, they sent out a request for proposal. The request for proposal was, who has a technology that can rival solvent extraction? We want to put a $4 million program forward to say, run hours on your plant, demonstrate that your plant and your technology can run many hours. And we, a Canadian company, actually won that bid. There were many bids that came in, but because of our closest to solvent extraction and our chemical nature, but much more efficient from its column-based technology, we were given the bid, and we've taken that $4 million program. We're at the tail end of that program now. We were able to show all the metrics that the technology could develop and provide and go up against solvent extraction. And the US DOD was suitably impressed, and they were with us every step of the way, meeting milestones and whatnot. And they flipped to the next stage, which was an $18.4 million build out of Louisiana. So that's been a really good support for us, and we're working those programs now. Other support, Government of Canada to write light rare earth, again, from a standpoint of run many hours. They're supporting us, and State of Louisiana with a $15 million program, basically incentives and whatnot that keep us manufacturing and building on our system in central Louisiana. Feedstock, we've got a really good team of feedstock people. In fact, they're in Brazil this week, visiting 3 different projects. The green means that we've got an opportunity to bring that feedstock into Louisiana by mid-26 for processing. You can see that there are a couple in the Far East. There's one in Brazil, and those are the feedstocks we're focused on to bring into Louisiana for initial commissioning and processing. The orange means that the mineralization is good, capital plans are good. They may be available for market in 27, 28, 29, 30. But there are projects that we're investigating and taking a look at. We're discussing with our management teams how their business plan will move forward and support our growth plans, because it starts with Strategic Metals Complex number 1, self-use. We move to Strategic Metals Complex number 2, self-use. Then we look to joint venture, and then we look to license our technology. So in closing, we've got all the right pieces here. We've got the technology in place. We have the association with the DOD, which not only validates who we are, but it accelerates timelines. It keeps the financial side of things really in check. And really just a smart business plan going forward. Is right place, right time. Multi-growth in various industries that I mentioned that are there. And think of this in terms of 1880, Standard Oil, Rockefeller. And what Rockefeller realized, that the boom and bust of trying to open up an oil field or an oil well, that was very risky. But if you actually invest in the oil refining, the margins were much more stable. The opportunity to process was much more stable. The returns were much more stable. And you could actually control the industry by controlling that oil refining. And that was the first mega monopoly for the U.S. industry. It was Rockefeller. 21st century, critical minerals, rare earth. It's a Rockefeller type approach. Control the refining, you control the mineral. Growth is there, very much advantageous. I see we have some questions, and Peter, you might want to come back on and pick out a few of those and ask away.
Yeah, certainly. Look, we've got a lot of questions. I'm not sure we're going to get to all of these, but we'll see how many we can get through here. And they're still coming in as I start. First one down at the bottom here, given the timeline for commercial production at the Louisiana Strategic Metals Complex, do you anticipate Ucore securing definitive offtake agreements with downstream partners such as magnet makers in time to support that milestone?
Yes, absolutely. And just like on the feedstock side, where, again, we're not solvent extraction dealing with one feedstock, we're dealing with multiple feedstocks. You want to have multiple customers. So we're in discussions with a couple of defense contractors, as you can well imagine, because of our association with DoD. We're also in association with EV manufacturers and permanent magnet manufacturers, as well as consumer electronics. Pretty well-rounded wheel. A couple of multinationals also that are looking to create offtake arrangements to bring product back to their jurisdictions, their country, and their industry, leaving some of it in the Western world and the U.S. in particular. But yeah, we've got 5 or 6 offtake discussions ongoing now, and they will support our growth plan going forward for stage 1 and into stage 2 and 3.
Next question here, just going from the line, and I'll deal with this one real quickly as well. Will there be any dilution of shareholders needed for funding in the next year? And certainly, as we've discussed internally and probably externally, our preferred source of funding relative to dilution is government grant funding, and we'll go after more of that. We'll reserve the right if certainly current valuations are not something where we want to back up the truck and do a lot of funding through equity at this point in time. But if we get to a valuation in the future where it makes more sense as CFO, I'm going to reserve the right to be opportunistic in the future relative to that, but no immediate plans. Next question, Pat, for you. What % purity is RapidSX capable of refining to?
99% plus. We currently have 52 stages in our Kingston demonstration plant. By putting a few more stages in, meaning up to 64, which is the plan for 1 machine in Louisiana. And those stages, by the way, 5 machines make up a train. That becomes stage 1. 5 more machines make up stage 2, 2 trains. And then you double that again, you get to 4 trains total and 10,000 tons of input. But the Kingston facility has been able to achieve 99% plus. And again, with a few more stages, we would get right down to the 99.99%. But at this point, it's at 99%.
Recent question here, and I'll address this one fairly quickly too. Will there be additional offerings, or is financing by DoD enough to fund the construction of the plant? The funding that we have right now, including the DoD funding, is enough to get the first machine up and running in Louisiana, and that's certainly the plan. Coming up the line here.
Peter, worth noting the current contract with the government is an OTA, other transaction agreement. That means that the $4 million became another 18.4 on top of that, making it 22.4. And there's still opportunity to get more funding on top of that, which Peter said is, anti-dilutive. And that's because it is an OTA, and the government is saying, hey, just continue to meet your milestones, hit your markers, and we'll continue to fund. So that's a really strong position to be in.
We might get 1 or 2 more in here. With the recent Canada-Germany partnership on critical minerals, how do you view this development in terms of the potential for deploying RapidSX outside of the United States? Are you seeing interest from other countries in RapidSX as a strategic solution to reduce reliance on Chinese-sourced rare earth oxides?
Yes, very much so. As I mentioned, we have 2 self-use plants that we're looking at, Louisiana being the first self-use plant. And by the way, when we're at that 10,000 ton marker, given current Asian prices with just a little bit of projection from Benchmark Minerals or Adamas, you've got a $700 million top line. And joint ventured opportunities, I mentioned our team is in Brazil this week, dealing with 3 different projects down there. So a centralized RapidSX plant in Brazil would very much be a smart move. Australia, another area where they've asked, could we look at a potential setup in Australia that was joint ventured? And certainly with that German-Canada alliance, with critical minerals and whatnot, very much an opportunity for RapidSX, and even an opportunity where RapidSX can be used potentially at the mine site to remove some impurities. So it's not just the refining in Louisiana or where the strategic metal complex could be. You can actually remove impurities at the mine site, therefore making processing when you get to the refining in Louisiana or where plant number 2 would be. It makes it that much more economical because you've removed some of the impurities at the mine site using RapidSX. And those discussions are ongoing as well. So the German-Canada alliance, again, right place, right time.
And I see we've got about 7 seconds left, so I don't think we're going to have time for any more questions, but appreciate Thanks very much, everyone, for your attention.
Yeah, thanks, everyone. And we'll look forward to ongoing updates.